Welcome back on the Pursuit of Wealth, everybody. It's Rod with Pow Group, your home for MJ Stocks, crypto assets, news and interviews. Today is Friday, August 1st, brand new month. Happy Friday. Hope you're doing well. And in this video, we're going to do an earnings prep video for Canopy Growth's upcoming Q1 2026 earnings. And again, this is fiscal. A lot of people always ask this, but different companies have different fiscal year ends, and Canopy is one of them. So we're going to take a look at the analyst estimates, what to expect in terms of revenue, EPS, earnings per share estimates. I'll add them all up, get a Wall Street consensus, give you the numbers on what to expect. I'm not really expecting much out of this, to be honest. I think it's going to be like a 2027 story before they're remotely profitable. But we'll see what happens. Usually the crown jewel is, your Wana and the stores in Bickle. I can't really see much coming out of the Canadian market, but obviously international and medical will be a big focus as well. So we'll look at the chart, and there is a bearish pattern. Again, we were talking about this in the previous video, but we'll give an update on that. So I'll give my thoughts and opinions on the price action in the days, weeks, months ahead. And as always, before we get started, this is not financial advice. This is for entertainment purposes only. I do own, full transparency, I do own a tiny bit of Canopy Growth in my portfolio, not a ton, but you can smash the like, subscribe, tick the bell, you'll be notified on any future videos or when I go live. Follow us over on X, formerly Twitter as well. Handle for that is @GroupPow. So Canopy Growth to report first quarter fiscal 2026 financial results. That's going to be on August 8th, 2025, and it's going to be for the period ended June 30th. So we will have 420 sales on there, and it's going to be pre-market on August 8th. So we're going to have also Luc Mongeau, CEO. This is Luc's first full report as well as the new CEO. And Tom Stewart, the interim CFO, will be hosting the webcast and conference call at 10 a.m. Eastern Time that same day. So let me know in the comment section if you'd like to see me live stream that. I'll do my best. That's pretty early on the West Coast, but I'll do my best to make that happen if enough people are interested. We'll take a look at some of the analyst estimates here before we take a look at the price action, what to expect there. In terms of revenue on investing.com, we're forecasting Canadian dollars, all of it's Canadian, 65.12 million for revenue. So again, this has not been good growth and a great trajectory, to be honest. But yeah, we're still expecting lower revenue compared to the previous quarter, but they are expecting slightly higher than what they reported last quarter. So 65.12, we've got negative 0.225, so they're still expecting negative earnings per share and EPS and a pretty sizable loss in terms of operations. If we take a look at TradingView, we're looking at negative 0.23 for EPS, 64.52 million Canadian. And if we take a look at Moomoo here, based on 4 analysts, revenue is forecasted at 64.545 million and EPS at negative 0.197. So again, we'll add them all up and then we'll have the numbers to go into earnings with. And if they have a big beat, miss, obviously these numbers will play a big factor. So if they come in line, probably not going to see much of a reaction. If they miss these numbers greatly, then we'll probably see massive downside. And if they have a huge beat, then we might see some decent upside. But again, it all depends on how much you run into those earnings as well. I think it was SNDL had great earnings and they had a nice daily high or low and consolidation period into those earnings. So the fact that they had such a big beat ended up being a lot more upside because of that, right? Because we consolidated versus running into the earnings, you might not see as big of a move. But in terms of revenue, consensus on Wall Street is 64.73 million. We'll round that up Canadian, and negative 0.2, we'll round that up to negative 0.22. So those are the numbers going into pre-market on August 8th. If we take a look at CGC here on the weekly time frame, yeah, we're still pretty bearish. We have a bear flag from the high to the low here. You can see we didn't get above the 0.32 fib. And one thing I've been using as well is adjusting it for log scale. And I find it a bit more accurate. So from the high there to the low, you can see here we did not get above the 0.32 fib at 138. And then we came down and lost key support at 116. Once we lost that, then you just take your measured move. And I'm going to redraw this because I've been using these fib tools based on log scale. I use TradingView logarithmic versus linear. I find it more accurate and just overall easier to view things and visualize things. But what I've been doing is adjusting the fib tool as well for logarithmic, and I've been finding it a lot more accurate as well. So we'll just go there from the high to the low, move that out to our 0.32 fib, and it's saying the measured move is about 87, we'll say 88 cents. So based on the weekly bear flag confirming, we had a very bearish day in the market today. continuing because of AYR. AYR is essentially no more. They're going to be restructuring. There's going to be a new company spinned off. I mentioned that this was a company that we needed to be very wary of, and we needed to stay clear of it. I said I wouldn't touch it with a 10-foot pole. And, I'm not here to say I told you so or anything like that. I'm just here to say there were so many red flags. I can't even name them all, but just to name a few, they had like interim CEO after CEO, board members leaving, executive team members leaving. They got out of markets in the U.S. that they were struggling in. They have high debt load. Florida didn't pass Amendment 3. They were ramping up production in anticipation of that, getting out of states that they can't be profitable in. Going in Florida, there was tons of competition. There were so many red flags and price compression, all those things, right? High debt load and just not a good look. And we have to be cognizant of that because we can't ignore those going forward. And we have to learn. The important thing is that we learn the lesson from that and then be able to spot that in the future and avoid it in the future. But obviously that was weighing on the sector over the last couple of days. SPY was also weak today. So the odds of this playing out are pretty high in my opinion. So in terms of percentage move from the low of this week, we could see about another 13 to 14% of downside. I wouldn't be surprised at all to see that occur as we just continue to drop to weekly lower lows, and we're still in a weekly downtrend as well. If we take a look at the daily time frame, we could see an EMA 12 and 26 bull cross occur, but they're still pretty far away. So I would say the likelihood that we head to daily oversold here on the RSI and see one more leg down is very probable. And keep in mind, if we do lose $1 again, that starts to speculate and get the gears turning on. Many people will be thinking, well, are we going to see another reverse split again? Because Canopy Growth already did a 1-for-10 reverse split, and it might join the likes of Aurora and do a second one. And that's never going to be good, right? When you lose that dollar, that start like fear and panic starts to take hold on emotions, and a lot of people might start to panic sell, and there could even be a lot of people with stop losses below $1. Look at back here when we were just at 77 cents and then we had that massive run. Anybody who added here or in the last few weeks, they might be adding with a stop below $1. So we might see a quick, fast flush. And again, if we continue to see the broader market, the S&P 500 weak, we continue to see weakness in the sector, then it's not going to be good for CGC either. We already had a bearish triple thunder crossover as well. We lost the 10-week moving average as support after getting above it as resistance, tried to confirm it as new support, lost it, and then we had a MACD and stochastic weekly bear cross. This is what we call in the POW algo service a bearish triple thunder crossover. So essentially when all three of those happen simultaneously, you get an alert in the POW algo service directly via email or in the POW group private community. You can see on the flip side when the price crosses above the 10-week moving average and we see a bull cross of the stochastic and the MACD on the weekly, we see tons of upside. Look, we can just go back to the chart and look, right? Look what happened the last time we had a bearish triple thunder crossover. Price was at about $8 all the way down to 77 cents. And that's factoring in the reverse split as well. So it should be in the low pennies, which is pretty crazy to think about here. Somewhere just under 10 pennies, right? Like it's a penny stock. And this thing was once, the darling in the space worth about almost $60 US per stock pre-split. So that's something crazy to think about. We are still well below all of our weekly moving averages. No major, nothing major to look at there. And I'm looking here on the daily. We could see a bear cross of the 50 and the 100-day moving average. You can see it's starting to curl, and these are lagging indicators. So typically what happens is the price moves, and then these moving averages catch up. And I wouldn't be surprised at all to see one more flush down, potentially stop out, get that reverse split FUD going again. And then, like I said, with SPY's weak, we could easily drop down to that 90 to 80 cent area. And keep in mind that if earnings are bad, that's not going to be good either. And again, we just have to be patient. But again, I've been saying for many, many months now, maybe years at this point, that cannabis isn't going to run until a major sector catalyst. We either need rescheduling, we either need safer banking, uplisting to the NYSE and the NASDAQ, or we need excise tax improvement here in Canada. And without one of those four catalysts, which I think are the most probable to happen out of any other major catalyst, obviously descheduling, full-blown legalization would be awesome in the US, but probably not realistic before those others. So again, crypto also stealing the show. So crypto, blockchain, AI, once those are no longer in the spotlight, I think they're going to pivot over to cannabis. We already have the Genius Act for crypto, stablecoin. They're working on the market structure, Clarity Act, anti-CBDC, and then shortly after, we're going to see them pivot over to cannabis, in my opinion, because that's the next low-hanging fruit, and there's a lot more things, bigger things to worry about, bigger fish to fry. And if you look at crypto, blockchain, AI, those are all trillion-dollar industries already, multi-trillion-dollar industries. Whereas cannabis is like, what, 50 to 100 billion globally? It'll be lucky to hit a trillion globally in the next 5 to 10 years, right? So we have to call a spade, and it is what it is. So we'll continue to monitor it. I'll be reviewing their earnings as well. And if you'd like to see me stream the conference call, please let me know. But let me know your thoughts and opinions. Are you expecting a beat, a miss? At this point, I would say 95% of people are probably expecting a bearish reaction, and myself included. All right, happy Friday once again. It's Rod with Powder. Thanks again for joining us in the pursuit of wealth. Have a fantastic weekend ahead, and we'll see you on the next one.